Hello everyone. Welcome to Day Trade Options. Just a Monday recap and some Q&A when people come in. But I'm going to get started on the day's recap, what we were looking for, the actual strategy that we're using, and the some that I missed. I did okay today. I think I profited around $500, but I did make a mistake today. I got into an Amazon trade when I actually meant to get into an Apple trade, which I probably would have doubled my profit on Apple if I had not made that mistake, but I didn't realize it had happened until it was already happening. um, so without further ado, I will get into today's trades, and I will start first I'm going to bring over a copy of this is one of the charts that I put in our trading charts for the group. And what I was showing them is this is a long LRC right here. These are the ones that I put in manually. And if you don't know what that is or how to do it, you can go to in my videos. It's kind of the gold colored one. It says, long LR, how I trade or use the long LRC, or how I set it up. And so I set it up, and I'll briefly show it on here as well. But I was showing them that the last few times that SPY, you can't see it on this one, but when SPY hit it was actually the 1.5 deviation. That's when we had that huge sell-off for 2 days in a row. And it was coming back up to the 1 deviation, which a lot of times when it hits the 1, it also has a kick down when the long LRC is in a downtrend. So I just pointed that out, and interestingly enough, we had that scenario come up today. This is that same long LRC. It came up to it, rejected. Now remember, this is an area because the long LRCs, let me go and show you how I place those. I put them on, this might get a little messy because I have all of my levels on this one. Here, let me go to, well, this is fine. So I go to the 1 hour chart typically. Sometimes I'll do a 4 hour or 30-minute, it just depends. And I'll draw, oops, I went a little too far out. I will draw in this long LRC. EMA cross up. And basically what I do when I draw it in is I want to see it pivoting off of key points. This is the 0.5 deviation. This is the mean. This is the 1 deviation, 1.5, and 2. If you want to see what that looks like, this is what it looks like. You can copy that, screenshot it, and set yours up the same way if you like. This is absolutely, for me, it's a must. I have to have it as I trade now because it's just it's just amazing. It helps me in so many facets, so many ways to get out of trades at the right time and to get into trades at amazing times. So today, if you notice, here's the only difference, and you just have to understand, because this was on a 1 hour chart. It did reject the 1.5, but you have to realize that the 1 is also going to be formidable. That's the most typical one that is rejected, but it will move outside of that to the 2. For instance, if you're in a downtrend and you get a move to the 2 and you start seeing a rejection, it's gonna go hard down. Kind of like what it did here. Look at this, off of the 1.5, just launched all the way down. Where did it go? To the 2. Went back up off of that, came back, retested the 1.5, came back above the 1, or the -1, which is still the 1 on the other side, right? Kind of consolidated, rejected here this day. That would have told you, yep, we're going calls all day. Came back down, hit it again, pre-market, rejected, came here, hit the mean, pushed back up, rejected the it rejected this level, and this is, you can kind of see this. I have a lot of lines crossing over. So this one is a super long LRC. Like, this goes back for many months. And I put this one in because I noticed that it actually makes a difference. We're also I used the downtrend, and then this is the long one, the super long one from back many months, and you can see where it hit right here. So I use both. It looks messy, but when you're zoomed in on a 2-minute chart, it's not so messy. So this looks very cluttered, and you're like, oh my gosh, I couldn't trade that. Well, I don't trade this. I just use it to mark my levels. So yeah, don't get too caught up in how messy it is. Just focus on where it's hitting. So if you notice, this candle literally hit perfectly on the one deviation, the upper one. Well, here's the interesting thing. If I go to a 2-minute chart, it's going to be off of it some. That's right here. And that's okay though. You just have to realize that when you're on a 1 hour, this is going to be literally anchoring or pivoting 1 hour key points. Well, those 1 hour key points are going to be slightly off on a scale from the 2-minute. The closer you get to it, the closer, I don't know why TOS does that crap. See, if you go to a 30-minute, look at what it did on the 30-minute. Right on it. Boom. 15-minute. So just remember, it's the 15-minute really shows it, right? Up, big rejection. Next candle, buy here or buy puts and hold on to whatever. So, because that would have been huge to get that. But anyway, on the 2-minute, I called it out, let everybody know, hey, you're approaching the long LRC. Just get prepared to get out. So it's extremely, extremely important. Keeps you from, it actually gives you the tops of the days and bottoms of the day for the most part. Sometimes it'll break through, and when it does, I use this level as like a typical break and retest of a major like this resistance level. I'm sorry, support right here, and resistance levels that I draw in manually every day. You really have to use it like that. So let's just say this breaks up into this area. You want to see a candle go above, maybe another candle, then a pullback, and then you start to see it push back up off of it. That's when you enter. That gives you confirmation, and you want to trade your major levels the same way. You don't want to just take a close over a major level. These days, the market makers are really like just taking people's money. We've been talking about that in our Discord quite a bit. So you have to be really prepared for, and just understand that when a candle goes above, they may push this way above, and that gets all the bulls all in a tizzy. Oh, get it, you got to get in, and they start getting in, and guess what they do? They sell it off, and they take all their money, and that's kind of what happened here. You can't see it on this chart. Let me pull up that. I don't have my daily SMAs, which I always trade with my daily SMAs. I just don't have them on this chart. I try to keep it a little cleaner. But my daily SMAs, I'll show you that it was, where did that come in? Why am I not seeing my daily SMAs? I knew they're supposed to be here.
200 EMA cross up.
I don't know why they're not showing up. Golly, what's going on? Okay, maybe I was talking about another stock. I'll take a look at that later. But anyway, I'll keep them on for now because it may show up. So anyhow, back to the trading. So we use the Anchored LRC strategy that is these lines here: the yellow, the red, the cyan, the red, and the yellow. The red represents one deviation. Yellow represents 2 deviation, either above or below, and the cyan is the mean. So I actually missed this one because I was in another trade. I'll show you my accidental trade. It was kind of stupid, but it is what it is. It happens. I was able to reduce most of my loss that I had, so that helps. So I got in on, or I didn't get in on this trade, but this would have been the perfect trade. This is an A+ setup. when you guys hear me refer to A plus setups, this is it. You have first candle coming down, you have a major level 534. That's subjective. Of course, I draw those in. It can be anywhere around that area, but for the most part, my levels are pretty good. I do compare them to Vince over at Options Insider. I'm a member of his channel as
200
well,
EMA cross up.
and he does an exceptional job of doing free analysis for everyone in the morning on YouTube. You guys should go check him out. Subscribe to him. He's a good dude. So you can see the wicks pushing down. Then you get another candle. It comes up. Sellers push it down. So it's pushing, pushing. Finally breaks the 534. Gets below the 200, which I want it to be below, right? It's pushing off the LRC. Gets down and closes below the 200 EMA. That is money. I will take that 100 times out of 100 times. Right here, I'm entering. Why? Risk to reward, guys. That's why this strategy is so amazing. Risk to reward. You catch this trade. I always scale out. Now I know it's close, but it's because we have a tight channel today. That when you have a tight channel, just means your pre-market was tight. But for me, I will always scale out at the yellow LRC because it matters. It will come down and boom, right off of the thing a lot of times. So I will always scale out at the yellow LRC, and then if I get below it or above it, I will allow to just hold runners and let them run, or I try to.
200
So
EMA cross up.
this was a perfect entry here. Scale out here for me, and then actually I may even enter back in here. Why would I do that? Well, you got your LRC right here, and you pushed up, so you got to realize that this was a green candle for a minute. It opened here, it pushed up, right? So this is going to be showing green. Then all of a sudden the sellers step in, they push it down. Once I see it getting rejected off of the LRC, I add in right at as close as I can to the LRC. If it's 1, 2, if I'm trading SPX, I may get in 2 more contracts. I may get in 1 contract. But the reason is this is going to be my exit at that point, possibly. I could hold and see if there's a retest to the 20. But typically when this happens right away, you don't get a retest until later. That's just my experience. Sometimes you may. But I would typically add in there and then let it just run. And I would probably scale out here because this is a long LRC and I know that that's a level. And I would be all out. Or maybe all out here. Just depends on what I see. I probably, honestly, during the day trading this, if I saw this come down and wick right up and close here, I probably would have taken all profit and would have been really happy with it. And then just wait and see if this gets below for a retest and then bam, back in, or exactly what happened here. So you could re-enter here off of this push or here for more confirmation. I would not do that. I don't like trading into the 20 or the 200. So to each his own. If you guys are willing to risk that, you go right ahead. And there's some amazing trades that go right through the 20 and the 200. I know, but I don't care. I've been burned by them so much. I've literally had this happen. You get in here, it goes here, and then boom, straight through. So I don't even let that get me anymore. Where I would have got in is right here. We got above the 200 and the 20, got above the 534. Take my next green candle above the close of this one and hold and probably add back in here because we had a pullback to the 534, had a push up, add more to your contract right here. Very, very simple, easy to follow rules. If you add here and it goes down, you wait for the retest or a close below the 20 and you get out. But by adding here, adding here, you take this push up, scale out there because that can reject. and then you just let the rest, let the rest go. And of course, this was really close, and this is when it got close to this level. I think some of our traders were actually in. I just informed them, you may want to go ahead and either reduce your risk, scale out really heavy because this may not get over this 1 LRC. If it gets over it, then maybe look for a retest and get back in. But for me, I'm exiting all of my positions once we get to the long LRC. Sometimes I'm exiting all on the yellow when we have a very extended or a wide ranging channel. So I will just get all out and wait for a retest of the yellow LRC. But outside of that, that was a very easy 2 back-to-back trades. So that's the way you trade this strategy. It's very simple. Again, on today, you could have had several good SPX trades that would have all been fantastic. I got $130. This was coming down so hard. Once it passed the 200, I just got in here and I just sold. I didn't even wait for all of this. I probably would have made $1,000 or so on this big move because the premiums were just printing. But I literally just bought in. I said, okay, I got to try this runner. I got in. It went down to like 150. When I sold, I got like 130. It's just market order. So I just scalped a quick runner. Just added an extra $130. That's off to the profit. But the next setup, there's a couple extra setups. And I'll just go over each one of them so that you guys can see how to trade this strategy along with the support and resistance levels. So we came back up. We curled off of where did we curl off of? The long LRC, like almost to a T. It got to it. Whoop! All the buyers stepped in, consolidated. What we were looking for is a flush of this level, but we never got it. So we had like a little wedge here. It broke above and off to the races. Got up to closed above the 20. Then when I see a push above the 20 and the 200 and a big level, I'm typically taking the next candle, which would have been this one right here, the red candle, because it went above the close. I would have, and if it would have went down immediately, I would have added on this pushback up maybe just because I get extra confirmation that the buyers are stepping in right here. Trade up, I'm all out right here. Why would I be all out here? Well, I would be all out on the LRC because I think it was ES. I think it was ES today. Let's see what time is at 12 o'clock. I'll go to this chart. I think it was ES or yes. Yeah, look at ES. 12 o'clock. It's pushing up to the 20 daily SMA that it already failed once. Right? I'm sorry. This is the 100 daily SMA. The white one is my 100. So it already failed the 100 daily SMA, and that's where we had this huge downside on the ES. Well, at 12 o'clock, where was it going again? And that's what I pointed out to the group that, hey, I would be getting out. Be careful. You're probably not going to get over this. It's possible sometimes that you just get a blast through, but not probable, right? So we're playing probabilities. We're not playing hopes and dreams. So when you see something like that, protect your capital, take your profits, and move on. And if you get above it and hold above it, because not only did you have the 20 or the 100 daily SMA. Remember, this is a daily. This is not an MA. It is an MA, but it's a daily SMA. It's not like a moving average, an intraday moving average. It's a daily moving average, and you can find that in your settings. Just type in daily. It'll come up in your indicators.
200 EMA cross up.
But not only did we have the 100 daily SMA, you also have the 5400 level right above. So chances of getting through both of those, possible, highly doubtful without some sort of kickback. So once again, when we were moving up here, that aligned at the 12 o'clock with the LRC and the 100 daily. So I had informed the guys to get out right here. That was the get out spot, not the get in spot. And then again, another great setup that came in here. One of the things we do is let's just say this had came down and we had all these wicks. So what I do is I'll come in and draw a box. And I try to cover most of the wicks. I don't get all the way to the very bottoms, but I get the majority like I did right here. And if I get a candle that comes down, especially when it clears the 20, the 200, and the major level, once again, the 534, it clears that level. Your entry is right here. It's perfect. You closed here. You take your entry here. What's great about this again? Risk to reward. Once again, very high
200
reward,
EMA crossover.
very low risk, because if this goes back up, your exit is right here. You close above this, you get out. Only thing you don't, I mean, you can manage your risk the way you manage your risk, right? You don't want to stay on a candle that comes all the way up here and closes, right? So if you get a candle that's just moving, just go ahead and get out. Don't sit and wait for it to close. That would be foolish. Granted, you could get out and it could wick and push all the way back down, but that's fine. Take your loss, move on, and forget about it, because it could have went this way and left you with a major loss. So it's better to manage your risk that way. I would have taken a put here, or puts, traded, scaled out at the LRC, held, and as soon as it pushed up off of this long LRC area, remember it's a zone, as soon as it started pushing up, you get out, take profit, move on. You can wait and see if you get a retest of the 20 and then a push back down and try to get more out of it if you want to, or just be happy with what you got. But you also had another setup right here. Once again, actually it's the next candle. So you're pushing down off the 200 and the LRC and this consolidation area, which is interesting, right? So things to pay attention to.
200 EMA cross up.
You get a close below. You get a big push down, which would probably cause people to FOMO in. And then they would freak out because it went all the way back up. Don't do that. Don't be that person. Wait for the close. Get in on the next candle that crosses down below the close. And hold it. And hold it. And your exit is right there on the long LRC. It's really that simple. That's how simple the trading is. That's what we did today. I did that on a couple other trades. I missed. I got a couple SPX trades. I did not hold them long. I did mess up on this one. I can't remember which one it was, but the one I got $90 on. I was down. I think I was down to like 400, or I was up 400 and something dollars on that trade, and I allowed it to kick back, and I think it was right here. I think I took this trade right here. I was down, I got out. I did scale out, but I ended up taking only getting $90. I could have got like 400 on it. I shouldn't have probably taken this one because I didn't wait for a retest. You could kind of consider this somewhat of a retest, but realistically not. A true
200
retest,
EMA cross up.
I have a hard time drawing candles, but a true retest would be coming down here, this candle coming down a little bit like it did, maybe another candle, you know, just like coming out the side. One pushes back up, you know, wicks here, pushes down. You get a green candle pushing down. Then you get another green candle. This would be your entry. If you have green candle, and then you that's a break and retest, right? So that's what I should have waited for. I still made $90. I could have put away 400 really quick, but I didn't. Okay, so my other trades today was my mistake was Amazon and Apple. So interestingly enough, I loaded Amazon and I loaded Apple. and I meant to only get in Apple. I did not mean to get in Amazon. So when Apple had, um, I got in Apple 2 times. It could have been so much better, but just poor management on my part today. Uh, I got in Amazon by accident because so I had highlighted it and that loaded it in my active trader. Well, I went over and I clicked. I thought I clicked on Apple. I must have clicked on Amazon again and didn't realize it. So I thought I switched my contracts. I didn't.
200 EMA cross
And
up.
so the funny thing is as it started going up, like right here, like this is where I entered Amazon. Well, it started going up. So I thought I was in Apple because Apple was going up. And so I was getting, I was profiting, and all I was just focusing on was this number. I didn't look to my left all the way over here. So then all of a sudden it starts going negative. I'm like, what in the heck is going on? And I notice, oh crap, I'm in Amazon. So I was like, well, I'm in profit. Let me see if it'll rebound. It didn't. It started going down more, and I ended up selling it like right in here. And I was down like 100 and I think $160 when I finally sold it. So yeah, that sucked. So anyway, I was down like $160, and then I waited and waited. I did get back in right here, and as you can see, I didn't get as much as I wanted because I got in light here. I didn't get in as heavy. But I took like $90 off. So I ended up with a $96 profit. I got in here and I think I only had two and I sold like right around in here and ended up with like I said, only a minus $96 deficit. Um, but you trading this strategy is very easy to
200 EMA cross up.
one locate. Um, it's very easy to locate or to see entries. That's one of the things that used to be kind of more difficult for me, like knowing, oh, okay, this is it. So for me now, it's just so easy and smooth, and I don't have any issues. Uh, I have no issues trading this strategy at all, or getting or no issues with my entries, and then just being comfortable with with the selection that I made or the trade that I made. For instance, like if I had paid attention, but I was kind of befuddled in trading the other one and I just got out of it. If I had paid attention to this is kind of showing you something here. You had a huge move down on Amazon. You wick up. What do you wick up to? LRC. Boom. Sellers push it back down. Well, all of a sudden you get a big buying candle back up where at LRC. Where does it push down off of? LRC. Where do you enter? Right there. You enter right there and you take it down to here and you take out all your profit. On your second green candle, you take out your profit, and because you're super extended from the 20 EMA, take your profit on your second green candle close, and then you wait for a pullback to the 20. If it pushes back
200
down,
EMA
you
cross
can
up.
re-enter for more downside. If you don't, guess what? You get to take profit at the perfect location almost, and then the rest goes up. But I did wait for this. I saw this happening. I entered here, let it go up some. I think I only had like two contracts, so I ended up with like a $90. So I reduced it by 96. The Apple trade was really good. So I got in. Oh, I was in Amazon, which was a bummer, right? And then I decided, I was like, well, crap, I was supposed to be in Apple. And while all that happened with Amazon, this started happening. And when I got this closed back up over, I was watching, I waited, I got a wick up here, I got this, and I got in right here on this candle. So see, it's very clear. It's pretty easy to see. Once again, you can draw consolidation box. Whoopsies. It's not going to do what I want. Oh, you can cut. Oh, I'm doing the live show. Sorry, Goody. I didn't know I was still in the other. Oh, are you? No, 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 no. You can come in. No problem.
200 EMA
Talking to
cross up.
myself, but I'm doing it. I'm doing the recap of the day. No worries. Um, I'm loading up my other Discord. I put out. I let everyone know I was going to do a live Q&A, but no one has come in yet. Oh, what times I start the LRC, Eddie, is hopefully you're still there. Sorry, I had you covered up. I start the LRC at oh, that's interesting. It's not showing you on my YouTube page. That's why I didn't see you. Bear with me one second. Let me pull it up real quick. Ah, okay, there you are. So I start them at 4 a.m. And well, now in the indicator, I have an indicator that does it for you, but it's from 4 a.m. to 9:29 a.m. and that is Eastern time. So you'll have to, if you're not in the Eastern time frame, you'll have to switch that to whatever your time frame is. Okay, so back to the Q&A, or actually the discussion. Oh, good, he left. So anyhow, where was I?
200
The
EMA cross up.
the Apple trade that I got in, which was perfect, was right here. It is this was my entry right here, and the reason I entered there is I had a box drawn there. I was waiting for this. I got back in. Um, it was actually pretty easy. It went up. I scaled out a good amount. I think I took the rest. I only made 184, so I think if I remember correctly, I just kind of went in lighter on this one. But I was able to make 184. Um, and that was just a beautiful trade all day. You could have traded this. The proper way to trade this would have been to if you want. Oh yeah, you're welcome. If you need the indicator, just let me know. I can put it in the comments or in the description later, or you can just hop in our Discord if you want, and there should be a link in the description. You can come in and ask for it, and I'll put it in. I have a free section, so you can come in and ask questions or whatever, and I can give it to you in there. Um, so the way to trade this with this strategy, and it's just so very simple. This strategy has like been a game changer for me. So I know that this is my long LRC.
200
I
EMA
would take
cross up.
all profit at this long LRC, but Apple was a beast. It was just going today. So basically, I would have taken all out here. I would have waited for a pullback to this level or some sort of pullback, which is perfect right here. This candle's an entry candle. I wait for the pullback, get a green candle, enter on this candle right there, and then just take it up. This actually gives you more confirmation. This might freak you out while you're in the trade because it comes back so far down. But as you see the buyers push up, just be calm. Don't worry about it. Your exit's the 20. You're not too extended from the 20, so it's not like a major give back a profit. I don't like to let it get back to the 20 if you're really extended. So once again, you trade this up to here. You probably going to take profit on this candle. I probably would have just because I saw 1, 2, 3. I've got my 20 daily SMA above, and I would have been out of this trade and been happy. I mean, you could, if you're really aggressive and like really just one of those over traders, you could have re-entered here, but you're trading into a major level that you shouldn't be trading into. And if you look, this level almost aligned with the other time frame when the others went down. So the ES was pushing down off the 100 daily SMA,
200
and
EMA cross up.
Apple was pushing down off the 20 SMA, 20 daily SMA. Oh, you're very welcome, Eddie. Yeah, you can draw them in manually. Did you see how I draw? Here's how I set mine up. I don't know you're probably well aware of it, but I'll show you real quick if you like. That's how I actually discovered this. I was messing around with the with the LRC, and I just started anchoring it in different areas. And I went in and just anchored it from the I'll go back a day or so and just show you. I just was anyway. I just so happened to anchor it at the 4 a.m. I wasn't. Yeah, I was on a different. I wasn't on SPY, so I anchored it at 4 a.m. and pulled it all the way out to 9:29 a.m. So not that the 1 minute matters. That's not going to make a difference, but that's how I actually discovered this is by anchoring it manually. Um, the code that I have in it actually does a little slightly different. You'll notice that it doesn't match perfectly, but it will. This will suffice. The code that I use is actually better. There's some slight variation in its direction, but it still works great
200 EMA
doing it
cross up.
manually. So Apple was a good trade. Here's the interesting thing. So the other part that makes this strategy really fantastic is you can change your bias, right? And that's exactly what I did. I forgot I actually got into this, so I did get in this trade. I just forgot that I did it. I think I'm losing it here lately. But so once I was in a call here and I ended up coming down here and taking a loss, I realized that this was a when I took my loss, I think it was like right around in this area right here. But when that was happening, I already had puts loaded. As you can see, I put my calls and my puts of the different trades that I want to do for the contracts that I want to trade that day, the ones that I think are setting up the best. So anyway, I got back in right here, and that's where I made the 178. I just got in, I think, again, only like 2 contracts. I was very light today. I wish I was heavy today. Of all the days, we had really, really smooth price action. Last few days hasn't been so great. But then the other trades aren't that important.
200 EMA cross up.
Eddie, do you happen to have any questions? I know we're on like a delay here. I'm going to type it in so I know when it comes up on YouTube. Hmm. Looks like it froze. I don't know what's going on. Oh, maybe it's working. Yep. Okay. Okay. Very good. I don't know when you can hear me. It's very yeah. It's so simple. There are some people. Um, I haven't really live streamed YouTube very much with chat, so I don't really know how delayed it is for you.
200 EMA
But
cross up.
it is so simple, and the thing is there's a lot of people that they have a hard time getting it, and I know sometimes things are just everybody trades differently and has has different techniques and different ways that they trade, different risks. Leverage is different. Um, but this is so simple. It really is so simple. And it's a proven strategy now for me over now several months of literally only having a few days of losses over several months. So it's just insane. It's insane good. Um, anyhow, I'm gonna wrap it up. I just want to do a quick recap and kind of explain how the strategy works. And if you have any questions, just ask in the comments. If you'd like to come and join us, you can click on the link in the description. I have a link to my Discord channel. You can join. It's free. There's also a paid membership. The paid membership is where I provide levels each and every day. I provide trading charts, and I provide actual live trading. So I call out my trades. I call out the trades that I see. I try to be finished around 11:30, 12 if I can, and have my profits that I want for the day. But I'll still continue to call out for the group, and if necessary. Most of our guys are, I think most of them are pretty much done by then as well. So it's been working out really well. Anyhow, I hope this was educational in some aspect. I hope you learned something from it, and if you like, if you like what you see, come and join us. Come and join the group. We have an exceptional community so far. I'm really happy about that. Just a great group of people. And anyhow, hope to see you in the Discord. And if not, hopefully you do well and this strategy will work well for you. You guys take care, and I will see you on the next video.